Welcome to our show, Hong Kong Brief. Today, we have some exciting updates from the world of business and finance. First up, Hyatt Hotels is making waves with plans to add over 200 new hotels in the Asia-Pacific region over the next 5 to 8 years. This expansion aims to capture the attention of younger affluent travelers, despite some challenges in the Chinese market. In other news, Hong Kong's stock market is on a roll, experiencing its longest winning streak in 4 weeks. The Hang Seng Index has risen for 3 consecutive days, fueled by positive earnings outlooks and notable gains in tech stocks. Investors are eagerly anticipating more fiscal stimulus measures as the market continues to gain momentum. Lastly, the Tech Latest podcast dives into the chip procurement strategy of Chinese AI giant SenseTime. With insights from Hong Kong correspondent Cissy Zhou, the discussion highlights the challenges faced by e-commerce platforms and the reliance on domestic chips. It's a fascinating exploration of the tech landscape. Please stay tuned for more detailed content. Nikkei Asia reports that Hyatt Hotels is set to significantly expand its presence in the Asia-Pacific region, with plans to open over 200 hotels in the next 5 to 8 years. This ambitious move aims to capitalize on the rising demand from a younger, wealthier demographic of travelers. President and CEO Mark Hoplamazian highlighted that this expansion would increase Hyatt's portfolio in the region by 67%, bringing the total to over 500 hotels, with a particular focus on lifestyle hotels that cater to diverse guest segments. Following the acquisition of Standard International, Hyatt envisions establishing 25 to 30 standard hotels across major Asian cities, reflecting a strategic shift towards lifestyle offerings that promise higher profitability. South China Morning Post shares that Hong Kong stocks are on the rise, with the Hang Seng Index gaining momentum for a third consecutive day, signaling a potential winning streak not seen in 4 weeks. The market's optimism is fueled by an anticipated improvement in corporate earnings, with notable gains from firms such as HSBC and Wuxi AppTech. The Hang Seng Tech Index also saw a boost, while mainland stocks experienced slight declines. Traders are eagerly awaiting the upcoming National People's Congress Standing Committee meeting, where fiscal stimulus measures are expected to be approved, further contributing to the positive market sentiment. Nikkei Asia delves into the strategies of Chinese AI giant SenseTime, which is navigating the complexities of chip procurement by leveraging domestic suppliers, including Huawei. In a recent podcast, discussions highlighted the challenges faced by China's e-commerce platforms due to strict no-return refund policies. SenseTime's reliance on local chips underscores a broader trend among Chinese tech firms to enhance self-sufficiency in critical components, particularly in the face of international trade tensions. This strategic pivot not only aims to bolster SenseTime's operational capabilities, but also reflects a significant shift in the tech landscape as companies adapt to evolving market dynamics. South China Morning Post reports a shocking incident at a wet market in Hong Kong where approximately 200 fish were found dead, leading to an estimated loss of 30,000 Hong Kong dollars, $3,860 for the vendor. The discovery was made by a fishmonger in his 50s at On Tai Market, prompting police involvement as initial investigations suggested the possibility of business disputes among fishmongers. CCTV footage revealed a suspicious individual seen pouring an unknown liquid into the fish trays, leading authorities to classify the case as criminal damage, now under investigation. The stall has been closed since the incident, highlighting the tension within the market. South China Morning Post also highlights the skepticism surrounding Hong Kong's transition to electric vehicles, EVs, as some car owners and industry experts express concerns over the adequacy of charging infrastructure. Despite the government's ambitious plan to install around 200,000 EV chargers by mid-2027, many believe that the current number of charging stations is insufficient. Car owners like Alex Hung, who owns a Tesla, emphasize the need for more accessible charging spots, especially at government facilities that often remain underutilized. Lawmaker Michael Luck echoes these sentiments, advocating for higher standards for quick chargers and better regulation of charging fees, as many new car owners still opt for traditional vehicles due to the high costs associated with EV charging. South China Morning Post further explores the real estate landscape in Hong Kong, revealing a stark contrast between the recovering residential and retail markets versus the struggling office sector. Analysts predict that the office market will lag behind as vacancy rates continue to rise, exacerbated by an oversupply of new office space expected next year. Meanwhile, the residential property market is experiencing a resurgence, driven by recent interest rate cuts and favorable borrowing conditions. The report notes successful property launches, such as the Echo House project, which sold out its units on the first day. Retail properties are also seeing some recovery, with high-profile tenants like Fila leasing significant space, buoyed by anticipated improvements in global tourism and relaxed visa requirements that could revitalize the retail environment in the coming years. The Sydney Morning Herald reports that Aidan O'Brien's Melbourne Cup contender, Jan Bruegel, has been withdrawn from the race after failing a CT scan at Werribee. This 4-year-old horse, initially a favourite, had shown impressive form with 4 wins and 4 starts, including the prestigious Group 1 Street Ledger Stakes. However, after undergoing mandatory testing, an expert panel determined that Jan Bruegel was at a heightened risk of injury, leading to the decision by racing Victoria stewards to prioritize the horse's welfare over competition. Coolmore's Tom Magner expressed deep disappointment for the team, emphasizing that the horse's health is paramount, while also looking forward to future racing opportunities for Jan Bruegel in Hong Kong and beyond. In another story, Aaron Wood has announced his exit from the race for Melbourne's Lord Mayor, marking a second unsuccessful attempt to secure the position. Despite being seen as a strong contender and receiving endorsements, Wood's campaign faltered against incumbent Lord Mayor Nick Rees and other candidates. He acknowledged the voters' decision in a social media statement, expressing pride in his campaign's positive vision for the city. Analysts suggest that Wood's loss was exacerbated by the Liberal Party's decision to field a candidate, which siphoned off votes he had previously garnered. Wood, who has a notable environmental background, plans to step away from politics to focus on his family and career. The South China Morning Post highlights discussions in China regarding potential personal income tax cuts as part of a stimulus package aimed at boosting domestic demand amidst economic challenges. Former officials have proposed raising the personal income tax threshold to enhance consumer spending, suggesting it would only minimally impact government revenue. While the current tax system is progressive, many earners pay little due to deductions, and high-income individuals often evade taxes through various means. Experts argue that while tax cuts could help, they may not be sufficient to drive consumption alone, advocating for broader measures to increase disposable incomes and stimulate economic activity. Nikkei Asia reports that the U.S. has officially implemented new regulations to restrict American investments in high-tech sectors in mainland China, Hong Kong, and Macau, particularly focusing on artificial intelligence, semiconductors, and quantum technology. The rules, which will take effect on January 2, 2024, stem from President Joe Biden's executive order issued in August 2023. These regulations define U.S. persons broadly, encompassing not just citizens but also permanent residents, which could significantly disrupt the tech and investment landscape in China. Although many U.S. investors have already been distancing themselves from these sectors in China, the new rules could still impact those who hold U.S. citizenship or residency while working in domestic funds. Interestingly, the majority of investments in these areas are state-backed, indicating a shift in the nature of foreign investment in China's tech landscape. South China Morning Post highlights that the U.S. is set to ban outbound investments in China's semiconductor, quantum technology, and AI sectors starting January 2, 2024, if they are perceived as threats to national security. This move is part of the Biden administration's strategy to curb China's advancements in these critical technologies, which are essential for military and cybersecurity applications. The rules target various forms of investment, including direct equity stakes and financing that could lead to corporate expansions in these technologies. Notably, this could affect high-profile figures like Elon Musk, whose plans for AI development in China may fall under scrutiny. The administration is also collaborating with allies to explore similar restrictions, indicating a growing international consensus on investment security in the tech sector. South China Morning Post also shares the inspiring story of Randy Mahomes, the mother of NFL star Patrick Mahomes, who has played a pivotal role in her son's journey to success. Randy, who became a mother at a young age, emphasizes the importance of education alongside athletics, guiding Patrick through significant decisions in his career. When faced with the choice between pursuing baseball or football, Randy encouraged him to consider the long-term benefits of a college education. Despite the immense pressure and criticism Patrick faces as a public figure, Randy remains a steadfast supporter, often seen cheering for him at games. She openly acknowledges the challenges their family has faced in the spotlight, describing the past 7 years as the hardest of her adult life, yet she takes pride in the accomplishments and resilience they have shown together. Nikkei Asia. The Asian bonds market has long been underestimated by global investors, often seen as a last resort rather than a primary investment option. This misconception has persisted despite the region's potential for competitive returns and lower volatility compared to the U.S. high-yield market. As the Federal Reserve's interest rate cuts create more favorable conditions for Asian central banks, the time is ripe for investors to reassess the opportunities in Asia credit. The Asian dollar bond universe, although it has contracted recently, still holds significant promise, especially given the substantial local currency corporate bond issuances in China. With a diverse range of issuers and a growing market, Asia credit deserves more attention from investors who have historically overlooked its potential in favor of more established markets. South China Morning Post, Mia Tyler, daughter of Aerosmith's lead singer Steven Tyler, shared her thoughts on the band's unexpected retirement, emphasizing that change can lead to new beginnings. As the daughter of a rock legend, Mia has navigated her own complex family dynamics, including her mother's struggles with mental health and their tumultuous relationship. Despite her challenging upbringing, Mia has transformed her life, becoming a model, actress, and artist, while also embracing her role as a mother to her son, Axton. Engaged to musician Dewey Bragg, Mia expresses gratitude for her journey and aims to inspire others through her experiences, highlighting the importance of resilience and personal growth. The Sydney Morning Herald, Michael Brand, the director of the art gallery of NSW, has announced his departure after over a decade of leadership, marking a significant shift in Australia's arts landscape. His tenure has been defined by the successful launch of the Sydney Modern Project, which has dramatically increased the gallery's visitor numbers and expanded its footprint. Brand's decision to step down comes at a pivotal moment as the gallery seeks to transition to a new generation of leadership, potentially opening the door for the first female director in its history. With a strong background in Indian and Islamic art, Brand leaves behind a legacy of ambition and vision, having played a crucial role in securing funding for the gallery's expansion. His exit, alongside that of board president David Gonski, signals a new chapter for the institution as it continues to evolve and adapt within the cultural landscape. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the SenseTime team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. we encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.